Okay, in this lesson, I want to go over, today's action, but really the past couple days action, because I want to sort of show you of how you sort of need to be thinking, and how you approach your day. So if you don't show up to the market uh, by 8:30, then you're going to be um, out of tuned with what's going on, right? Um, so you can still show up at 9 or show up at 9:30, but just know that when you show up at those times, that there's no guarantee that the move has already gone, um, or that you missed out, and you might have to wait until 10:30, or you might have to wait until 12 or 12:30, right? So just know that I used to have that problem where I just wake up, roll out of bed, and just think that as soon as I open up my computer, I'm entitled to just take on a trade. Like, I want to make money, so I'm gonna hit submit, make money. But that's just not how trading works. It is a very calculated risk, and when you start playing with and trading with money, and a lot of money, you have to take this serious. This is it is so easy to get in some really bad habits. And so ideally what you want to be doing is you want to be just waiting for 1 to 3 trades a day. You do more than that, then then just move on with your day. So, like, say for instance today, if you didn't so let's just go back to, say, replay after the first 30 minutes. If you came in at 30 minutes, what you need to do, because every day is different. Every day the prices is in relations to the chart, and where it's at is going to be different. So today was different than yesterday, and then tomorrow is going to be different than today. So how does one make sense of how the market works? So you have to understand that the market is it's a structure, and so a lot of times when you hear of a lot of people talking about like order flow, it's a sense of what the market structure is, and a lot of times market structure comes from it comes from a volume profile. When I say volume profile, it tells you what the structure is. So right now, during this period, most of the volume was traded right here and then also down here. And so you imagine the day, if you see on the left, this is how the day was trading in a zone. So in the morning, I'm just going to go ahead and delete this. In the morning, we gapped down below the bear pivot. So what does that mean? That's why it's called a bear pivot. You have to be bearish, and especially if you have a gap down below it, it's now resistance. And so in this case, where you see a lot of times where that first move goes right into that second fib, but so from now on, once that hits that first 30 minutes, now you have a point of reference. So that's the interesting thing about what they call one-time framing, or market structure, but you have some kind of reference. So if you don't trade anything, and just leave the first 30 minutes, ideally, a lot of times they say you really don't want to trade the first 15 minutes, because the first 15 minutes is a lot of volatility and wonkiness. It's like the last 10 minutes. It's really the first 10 minutes, the last 10 minutes. You could have a lot of volatility and you don't know the direction. But in this case, you open right below, so you just short it. But if you waited for that first hour or first 30 minutes, this is your structure. In reality, everything in this gray is what you potentially could be playing for the day. So, and then if it breaks the structure, and it breaks this fib, then guess what? Then the structure continues to the next level, and that might be your structure. But look at the market as a structure, and you see how the first 30 minutes they dropped it, and then the next 3 30-minute candles, so that's an hour and a half, they retraced that entire move. Then they took that move again, and they're playing within the zone, right? So that was your opening, and this is your close of the first 30 minutes. And so a lot of times how the market works too is you have a 1 hour range. So you'll have that first hour sets its range for the day. So after that first hour, so it's say for instance, right here, oops, I'm gonna not do that. We'll go ahead and exit out of this. If you notice right here, these two candles was the first hour. So that first hour, the range was set. So we came back above, and then you notice that there you go, that is your range. So you can call it a failed breakdown reversal, but it's really a zone. So now that you're above this zone, it came back down, they scooped it up on that new TPO right after 9:30, and then they filled that zone back in. Then what did they do by 10:30? They couldn't clear, so they came back down. And you see how they're just working within the zone, and they came all the way back down into that time period after the first hour, and they held it. And then it wasn't until the very end of the day, you could see the last 10, 15 minutes, they broke it out. So I don't want to necessarily confuse you as the viewer of this, but you need to really start thinking zones and look at the market as sort of like a 3D or like a two-dimensional auction, I would say. And so you need to, as a trader, especially if you're using these pivots, you need to make a decision how you want to trade, right? Do you want to be, so in the morning, when you wake up and you're entering into the market, you need to first figure out where are we going to open. Sit back, maybe just let the first 15 minutes. If a move gets away from you, great, don't worry. Because look what's interesting. So this entire move, all of this was going on, and this was the first 5 minutes, then you have 15 minutes. So even after the first 15 minutes, that used to be my longest rule, and I actually might go back to it because it's the safest rule. And if you notice, you would have missed all of that. Who cares? Because guess what? This broke. You would have had 50 points here. And guess what? First 30 minutes is done. Second TPO is open. You're in a support. You do the opposite. There's another 50 points. Within less than 30 minutes, you would have had your 100 points, and you would have missed all of this. So in trading, you're not going to be able to make every move. So you're really going to have to work on like FOMO and and entries and things like that. But you have to sort of understand that if you miss something, you wait. There's always going to be opportunity. And you might sit on your hands for an hour or two and there's nothing there, right? But it's better to be out of the game than in the game and chasing and making mistakes. So with that said, you need to decide, one, you need to figure out, you have to have a plan for the day. Okay, the plan is, hey, we're below the bear, so I need to be bearish. But that doesn't necessarily mean you're bearish for the day, but you need to see that is going to be a major resistance. So that's a better way of putting it, as in, where's your resistance for the day? So you would say that's your resistance. And then everything below, you're shorting. But then you also need to figure out where could you end up reversing, right? And so you have to make a decision at some point, is it right here? Okay, well, you go in right here and you go long. Okay, you get stopped out. Okay, you wait, it's down here. What do? You didn't get stopped out. This only went down about a point or two. And so at some point, there's gonna be moments where you're going to get stopped out and you're gonna lose money. But you'd rather get stopped out at 10 points and then you make 50 points, right? And so all you need is to make 2 to 3 trades a day and you're good. But the second thing you have to decide is, are you going to be a scalper today and take on 10, 20, 30 trades? Or are you going to be really precise and let things sort of develop? In the moment, it is really hard because, I mean, look, you gone on here and like you're like, okay, I'm gonna go short, and what do? They go up, you know. And so this is reading the market, but a lot of times you have to sort of let things breathe after a big move, you know, and let 30-minute candles play out. It might take an hour for you. So I like to recommend that every time you take one trade, don't trade until another 30 minutes or an hour later, right? Because that's a really good rule of not getting into choppiness or getting into over trading. So even if you took this trade and then new TPO this trade, you would have been done. If you missed all this, you could have took this trade and that would have been 50 points, right? And if you waited until the next TPO after this 30 minutes, that's 9:30 candle Central Time, you would have saw that, look, this candle closed above. So you have a close above, and so there could be a lot of things that could happen, as in they could come back down and then continue, or they could break back down. But how you want to look at this, you always want to be on the lookout for a failed breakdown reversal. In reality, technically this is not a failed breakdown reversal. It is on a pivot, but to be honest with you, this is what's considered a halfback and a continuation. So if you notice right here, you see how from here to here is 64 points. You see from here to here is about 30. So you see that line right here. So all that was a pullback, you know, and then a continuation. So that's the third thing you want to start noticing. You want to start being attuned to what's going on around a pivot, because you can go look back time and time again and see that these pivots actually work. Now, I like using a 5 minutes because 5 minutes and seeing how things close gives me an idea of what the market could do. So in essence right here, you see on this, you had this candle that came down, then they scooped it up, and then it closed up here. This is telling me is let's go back to replay. Look at this. If you just looked at that, I mean, to me, that looks like a recovery. They're going to recover this. Now, if you saw this and you missed this move, sit on your hands. You either miss the move or you wait for a possible pullback. If it pulls back, now it may not be exact right on that, right on the pivot. So you're going to have to make a decision on how you want to enter. You know, you either going to enter maybe 10 points ahead of it and then risk 15 points, 15 or 20 below. Whatever you want to do, but just know that it could come down and never make it all the way back to the pivot. You sort of missed the primal entry, when you're down here. So let's take a look. So if you take a look, it on the next candle or few candles, it never came back down here. It actually right here came. That was 753. And that was about 744. So about 10 points away from the pivot. And they were scooping it up. And another good area you can look at is, remember, you need to be playing both intraday and multi-day. So when you have a lot of volatility, you want to be playing multi-day as well, because you can see that this line, this red line that I had right here, that was a fib pivot. So these are the major pivots, and these are your fib pivots, just like intraday, right? So you can see how things were playing off, as in we ran down into it that first 5 minutes, crossed down, came back up, used it. It was resistance, and then, and be honest with you, I guess what you could do too is look, if I just took off this and you just played the chart, look at that. You could have realized, okay, hey, you're below here. You're now back above this line. Okay, any pullback. Look, you're getting into the pullback. Next move right here. Okay, from here, go down to VWAP. Okay, from here, it didn't quite make its way all the way up here, right? But that right there, is a major level. So that's why it's also nice to look at those daily. But see what I'm saying? As in, you want to keep distractions away. Like if you have too many lines, too many things, but you just have to realize when you have volatility that if you enter right here, you actually are not risking right here. You're risking to above here. And if you would have risked above to the open, you would have been safe, right? And that right there is about a 10-point move. So you almost have to have a perfect entry. So right here, if I entered right here, I actually would have a 15-point stop. So if you have 15 points, now it all depends on your sizing. What's your risk reward and what are you willing to gain? Like, okay, what are you willing to risk to what potential gain? So if you're only willing to risk 10 points and you want to make 20 points, that's a 1-to-2 ratio. It's not really, to be honest, that's not really that great. I mean, I'd rather be and sit on my hands and wait for an optimal entry. So an optimal entry right here, if I was here at 2 contracts, right, and I risk 15 points, that's 30 points. In NQ, that's 30 points, times $20, that's $600. So I'm willing to risk $600, and I could be very wrong, right? If I'm wrong, then guess what? Then I know the direction that's going to go, right? So, but you only have so many points throughout the day to enter, right? None of this is important in the middle. You needed to make a decision right here. You needed to make a decision right here. Any decision in between using like these pivots, you could do it, but you also realize that you're risking, as in they could easily came up, then came all the way back down. That's not necessarily optimal. These are chase entries, and which are fine, but you need to size accordingly, right? Or these need to be take profit areas. So if you risk $600, where do you want to go, right? Well, I don't want to go 10, 20 points here, right? Yes, you could take profit. I want to wait for the bigger move. So I rather take profit down at the fib and then any remaining contracts down here. And sure enough, plus you got to remember it's 10:30, so Europeans closed, and so you have plenty. If it hasn't broken out, then the momentum is over with, and so we're gonna still be in consolidation. And remember, like I said, zones. See this right here? This was the opening. This is the bottom. You see how it played within the zone all day, right? So go back to other days and look at how these zones are played. But you have to believe in yourself, and you have to believe in the charts and the pivots. Right here, this is what you would have saw at the moment. And this right here was at 10:30, right? And at 10:30 you could have shorted, but remember you have to risk above here, because what did it do? It ended up actually going past it, right? Or if you didn't want to go right here, you could have waited and see what ends up happening. But just remember, more you wait, I guess what's the saying? More you wait, less optimal the entry you're gonna have. So you're rewarded for being bold. That's how trading works. When you are risking, when you're at these extremes, and when fear is at its most, because most people are getting FOMO right here, and they're like, oh my god, we're gonna break out, But that's not how you as a trader should be thinking. You should be like, oh great, I'm at the most extreme to the top. Here's the most extreme to the bottom. You want to be going long or short, right? So if you shorted here, then applaud yourself. If you're wrong and you get stopped out, guess what? Then we're breaking out, and now you have this gap. And your next move would be these fibs. So use these fibs as exits, but then also remember that your previous day close, these candles you see like this, are also great targets. So I know this is a lot of information. Rewatch this, but what I'm trying to show you is you see how the market has a breadth. And I know in the moment it's very difficult. So you have to be really good at being present and then just blindly executing around a pivot and leaving yourself about 10, 15 points. You could get stopped out, and guess what? It sucks. It sucks getting stopped out at 10 points, but guess what? I've gotten stopped out many times, and then it comes back down. And what do you think I do? I get back in, right? I get back in. And guess what? If you would have missed all of this, look at this. They ended up coming back up. And you should never get scared of candles like this, right? Because you're underneath a pivot, and they told you that they're selling. So any push, that's just an opportunity for you to scoop, for the actual bigger move. And the bigger move was right here. Now, the afternoon, these are different plays. This is how the market structure works. Remember, I told you leading up to noon, you have to decide, well, where are you between noon and 10:30? So let's see, look right here. If I would have, this replay, let's do the replay actually right at the 12, let's do here. Okay. I don't know if it's going to show me. Actually, it won't show me. But in the moment, while this was happening, this candle, this 4-hour candle was basically, like a shooting star. Like it looked like it was going to go. But to me, it makes no sense. How can you have a shooting star and yet you're underneath a resistance and you just have a lot. You have a lot underneath you. So I was willing to bet that once again you're using this as a resistance, and then we're pushing into it, and I want to short it. And sure enough, what ends up happening? They push it up right at noon, and then they immediately dropped it. And this is the candle that I wanted to see. I wanted to see a nice red shaded candle down into this support. That makes more sense to me, on the sentiment. And sure enough, here's your 12:30 candle, and then what do? It's under VWAP. You continue to short it, but you have to always be aware of those failed breakdown reversals. And now this is truly a failed breakdown reversal of a pivot, of a fib pivot. It's a major line. So again, let's take off. There was actually multiple. Here we go. Let's take off this. Actually, no, I'll just put on this line right here. These are the major lines. It's the same as this to the left. But you see how the first 15 minutes they drop below, and then it looks like they were going to keep going. But think about this. They've retraced the entire move. It's very, very unlikely that they're going to come all the way back down. If they do, this thing's going to just keep flushing pretty fast, and it's going to go down here for the end of the day. And usually that happens when there's not a lot of buyers. It's usually when there's like this. If we were below here, absolutely that would keep flushing. But you still have a lot of potential buyers coming in. So it's all about the bigger time frame context to know what's happening. So either way, when you got in right here, if you saw this break, I actually was short right here. Well, what do? You take a short when it's in your favor. You put a stop to break even. If you get stopped out, what does that tell you? That means the trend wasn't very strong. The trend was not very strong. This should have kept on going. We were under VWAP. You're breaking down. They should have just kept on going. But the mere fact that they broke back above and they ended the candle above here, you see now this is a failed breakdown because they have this, once again, it's like a shooting star. But this makes more sense because it's over a critical pivot. Then what did they do? Came up to VWAP. They retested it. It took 5:10, and then on the 15th minute of that 30-minute chart, that's when they launched it, right? So you'll notice a lot of times, again, you can break then your 30 minutes down into 2 sessions. Your first session is the first 15 minutes. The second session is the last 15 minutes. A lot of times the market likes to play that way as well. That's why some people use 15-minute charts. Because look right here. Look at this candle right here. You go 5, 10, 15, down in a VWAP. Then the second 15 or the second half of the 30-minute, 5, 10, 15. They brought it back up, right? So use that in your favor. So you always want to be looking for this, okay? So I know I'm like beating a dead horse. So this is the most frustrating thing with people when it comes to trading is thinking something's going to go your way and having a bias like, well, it has to do this. And then when it flips, you have a hard time flipping, right? But this right here, they're gonna recover it, and then they're trapping all these people. This is a liquidity squeeze. I mean, they're scooping this up and they're buying it back up. So what do? You hold. So in 30 minutes, that's the entire move right here. But see what I'm saying? As in, if you just sat on your hands, do you rather take 20 points or rather you take 50 or 80 points? Patience pays. If you're patient as a trader, you'll get paid better. Not every day is the same, and not every day brings you fortune. But if you kept your composure today and you only played the morning, say, there were multiple opportunities for 50 points. 50 here, 50 here, 50 plus here, 50 here. So that was 200, 250 points. That's not including the big drop. Afternoon, same thing. So when you see volatility, just know that there's a potential going to be a lot of room for movement. So let's take a look at other days. How do they play out? How do they play around the pivots? See, this doesn't really play very well with around the bigger time frame pivots. Why? Well, I mean, we're boxed in. Anything can happen around here. But I mean, here you go. You break above, you break back below, and it comes near. But that's why you need. Ideally, you want to be using. But look, there's not a lot of volatility here. See the range? You're only in about 100-point range. This right here was a lot bigger range because we had this massive gap down, right? So you're going to be playing within these bigger ranges. So use the multi-day pivots as well as the intraday, but know that on higher volatility that they'll trump. But at the end of the day, the only way to survive in this as a trader is sitting on your hands and just not having fear of getting in to very critical spots and then waiting and seeing if bigger opportunities come. Man, this right here is a big I love these plays. Like, they happen almost every day or every other day where you're gonna have moves like this. Because why they're so great? Because of this. It traps all these people, and it's like clockworks, day in and day out. So all right, hopefully this helped. Hopefully I wasn't all over the place, but I know there's a lot of lines and there's a lot of going on, but at the end of the day, there's a rhythm to it. Don't get frustrated. Just watch your sizing and you have to just have patience. I mean, 5, 10, 15, 20, you might sit on your hands for a freaking hour. That's a long time of staring at a screen. So that's why I'd rather just get in and then walk away and just don't even think about it. I love coming back, seeing myself getting filled, and up, XYZ amount of dollars, feels really good because I wasn't there.